That's a weird one. Very weird. What's up, everybody? I want to get this disclosure done while we wait for AMD here. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. I am an associate member of T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There's the position disclosure right here. I got out of Amazon into the close, kind of got to my target. I got new positions in KRE and OSTK. We can circle back on those positions in the day here in a second. Waiting on this AMD. I think this thing should hit any moment here. Oh, it's 4:15. All right. I rushed to get us up and moving here for 4:10. It's 4:15. So I guess I can talk for 4 minutes, 4.5 minutes. Man, I'm like afraid to say it. I'm loaded up to the long side. I'm really heavy. I was really heavy throughout the trading day today. I'm still really heavy. I sold a little bit into the close. I took a little bit of buying power in the close. I did get out of Amazon into the close, but I'm loaded up, and it's a little nerve-wracking because the technicals are not confirming that yet. But you know, I'm going with my thesis here a little bit. Raw flows, and I'll manage risk appropriately if my idea here is wrong. But there's an echo on YouTube. Let me know if that fixed the echo on the YouTube. Hopefully it did. Yeah, the technicals aren't confirming it yet, but I'm really looking at these seasonality flows here as we're getting into the beginning of November, and I might still be early, or I might even be kind of right about some things, but get totally screwed by the Fed or Apple. Is it weird that I'm more worried about Apple's earnings report for all my long positions? I mean, including the fact that I'm long Apple, as I am the Fed itself. Yeah, we don't have a budget. We'll see if that gets passed. I feel like that's almost become a little bit of a non-event for the market. It used to be a big deal, but we're so used to these stupid politicians getting nothing done or potentially getting things done in the last minute. So we'll see how that plays out also. But I'm loaded up to the long side, so today was a good day. Market's up. What do we got here? 2.5 minutes still to AMD. S&P's up 0.5%. Qs are up 0.35%. The IWM is up 0.75%. I like that. All three of our indices here are back to the 80 MA on the daily chart. So I'm telling you, I'm loaded up to the long side. This is exactly where the market should fail. This is exactly where the market should fail. Somewhere in this area between the 80 MA, like 418-ish, today's high, and 420, maybe 422 is where this market should totally fail technically. We are still below 420 SPY level, which is a huge level that this market needs to get back above for the bulls to even begin to prove themselves. The Qs are still below their major recent levels also, so they haven't proven themselves either. Get these Qs back above 352. IWM, I guess we never really fully lost that 162.50. We did one day on a closing basis to snap back up, so there's still potential of this kind of being more of a shakeout move for the IWM. But the IWM is bear flagging. It's correcting through time. It's super weak. It's super bearish. We got back to the 80 MA here. So again, it's here or maybe slightly higher where the market should fail if the technical short-term downtrend is going to continue. I am looking at a market here that is in a correction, over 10% for the SPYs and the Qs, very nearly a bear market for the IWM. I think on a close-to-close basis from the July high to this month's low, we're down 18.3% in the IWM. I did the math this morning, actually, so I'm pretty sure that is correct. But, you know, we're hitting the time here. If I can get through the Fed, and I think that the Fed, everyone's very nervous about it, actually isn't going to be as bad. I think that they're watching the TLT. They see the TLT doing the work for them. I think we read a headline the other day that 5 seconds here. Let's see this AMD, and then I'll try to remember where I was at with TLT. Starting point here is about $99 for AMD. Quick little uptick. Doesn't look like it's out yet, though. There's no promise or guarantee that it has to come out at the time that we think it is. There it is. Down, down. Down, down, down. $95. Broke. Everybody's got the numbers. I'm not sure what the measured move was. I know Pat mentioned it, but I'm not planning on trading AMD, so I didn't honestly overly pay attention. 8-ish. So that'd bring us down to like 91 or so. $94 with some selling back above 95 level. If anybody's got the numbers, please post. Thanks, Dave. I need to know adverse expectations. Announced revenue for the third quarter of 2023. Oh, thank you. Jump to Pat's comment. Adjusted EPS 70 cents versus 68 cent estimate. So beat by 2 cents. Sales 5.8 billion versus 5.69 billion estimated. That's a beat also. Something's hitting this thing down. I wonder if it's gross margin. Guidance not great, we're thinking. Yeah, something's hitting this thing down. I would guess it's either guidance or the margin. AMD sees Q4 revenue 5.8 billion to 6.4 billion. Estimate 6.4 billion. So AMD is light. We just announced bankruptcy here after hours, Pat? Is that what you're seeing, Pat? It's not really down ticking on it. I got some extra stock I want to head out of if that's the headline that you just posted. Pat. AMD still around 95. AMD sees added softening of demand in embedded markets in Q4. Lower sales in gaming segment in Q4. Adjusted gross margin about 51.5 versus estimates of 52.1. So that's light also. Yeah, so that's the guidance here. Nice. I wish I could have got hit that bid slightly earlier than I hit it. It's a 12-cent difference in that we. Just still got away before the market here. surprised about that headline after the news we saw this morning, which sounded like it was the opposite. Like it was almost like it was being rescued. Such a shitty price on that second bid hit. AMD still hanging around 94. So much for that bull flow that we saw in Wii the other day. Alright, well, I hit out of all that extra stock I bought that other day below at like $1.82. I was staring at that bid at $2.20. I'm like, Pat, what? What are you saying, Pat? And then they hit that bid. Saw Bill's headline. I was able to hit $2.08. Still made I don't know, 30 cents or whatever on that. Still made 30 cents on that trade, but disappointing. This thing was up at $2.80. I thought that this was going to be a run. No, this is their first bankruptcy. They've never declared bankruptcy. But Chris might be right. This might be one of those ones that they ridiculously buy up. Spread back above $2 here. I'm more interested in watching the Wii price action than I am the AMD price action. The AMD price action here is a little bit boring. Yeah, that Hertz squeeze was insane when they declared bankruptcy. Hertz had assets though. WeWork doesn't have any assets. They don't own any of those properties. It's all leases. I know Elon Musk did that once with Tesla. But yeah, I remember. I know what you're talking about too, Brendan. That was a that was one of the bankrupt ones recently. No, Brian, Byron. You can trade as much or as little as you want. AMD doesn't seem great to me, especially with how the market has been punishing these earnings reports. Guiding down like that in AMD is bad. The stock is actually, I actually think the stock is holding up better than I would expect compared to what we've seen recently with some of these earnings reports. The margin guidance miss and the revenue guidance miss. Stocks have been getting punished on just even kind of coming in line, let alone missing. I'm staying away. Thought about maybe if there was a fast move to 91, like to nibble a little bit, but I'm just going to stay away from this AMD. Just currently trading down. All right. Let's go back to our actual meeting. keep an eye on this AMD out of the corner of my eye. Pat reports the full thing. TLT, did TLT get smoked like that into the close and I'm only seeing it right now? The last 10 minutes? Oh, I didn't see that till right now. That's gross. That's gross. The market held up really well today considering yes, month-end flow there. Considering TLT, especially into the close, and the dollar, this UUP ETF getting above 30 here for the first time. All right. All right, so I don't remember exactly what I was talking about before I got interrupted by AMD. It was something about TLT, though, because I've got this chart up. TLT, again, I don't remember what I was talking about, but 85, 83 are the key levels. So let's see how this TLT performs tomorrow. You know, maybe it was being influenced a little bit by some of these month-end flows. And honestly, maybe the stock market up move in strength that it had was also some month-end flows. There's supposed to be $5 billion of buying from pension funds into the end of the month, which is not a tremendous amount of money. But those flows really have a major impact on markets, and that's one of the things that I'm looking for here, and it's one of the reasons why I'm starting to get as long as I am. Though we got to get through the Fed, we got to get through Apple, we got to get through AMD, eventually we got to get through NVIDIA. I think that these seasonality flows could create a November that frustrates bears, even if the bears end up being right at the end of the day. And that's kind of what I'm looking for here, as we have a SPY that has entered into correction territory. Sentiment seems like it's just gotten extraordinarily bearish. The IWM, rightly so, the sentiment is extraordinarily bearish. I mean, I was talking to myself the other day about the rollover of the debt that's going to be happening for a lot of these IWM names, and particularly really in like 2024 through 2026, where if we are still higher for longer at that point, it's going to be a problem for some of these companies, and we might see a lot more bankruptcies a la WeWork. But for the short term here, if we can get through these couple last events this week and get into November and get through the buyback blackout window, you're going to hit the strongest month of buybacks for the average typical year. I just saw that statistic recently. I didn't realize that. November is the strongest month of the year for buybacks historically. And it's going to be right at a time when the CTA flows should begin to get a little bit more positive. I think that overall a lot of the positioning is neutral, but there's some re-leveraging that could happen in this market. I think it was even Pat's note this morning that was kind of laying out a little bit of a bull squeeze scenario that could happen, because what we see when funds are positioned the way they are right now, and I think one of the cool stats I saw this morning was single stock shorting has increased for the last 12 weeks straight, which is the longest ever recorded. Is that if you can begin to get some seasonality or some flows, which upticks this market, especially in a market that's a little bit thinner right now, you start to squeeze some people, and then you start to have the upside performance tracers come in, and that's why these moves have been so big. You know, in my brain, I've almost wondered. We've called the move that we had that ended in July a new bull market just because the market went up by 20+%. In what world, though, and this is a question that I'm asking, is this actually not a bull market? It's just an extreme bear market rally, similar to, but even more extreme than some of the bear market rallies that we actually saw within the bear market in 2022, like the rally that we had in March, like the rally that we had in July. These were just face-ripping rallies if you were trying to hold shorts throughout this, or you chase to the short side too late. And they actually, I thought, created some of the best opportunities of the entire year in 2022 was to the long side, and it always corresponded at those lows when sentiment was getting super bearish like it is now, but positioning was also getting super bearish, which I would argue that we're not quite there yet with positioning being super bearish, but we are enough that if you were to get some seasonality upticks here as we begin in November, whether the buybacks, the CTAs, the VIX stays low or even goes lower, so you can get some releveraging from the vol control funds. That leads to squeezing, that leads to performance chasing, and that's how you get some of these really, really big rallies that can come into play. If you want to talk really, really big picture, I don't know. You've had sell-side analysts like Marco and Mike be bearish for a very long time, and obviously be, we could say, wrong for a very long time. But these aren't, even though they've been wrong, these are smart people, and I think it's worth it to listen to some of the stuff that they're saying. I just think that even if they are right, you could get a face-ripping rally into the end of the year before that they are. And that's kind of what I'm looking for here as the sentiment has just become super bearish. Obviously, risk management is the key to success in this business, so I will make sure to manage my risk, and I damn well better with the amount of size that I have on right now. But I'm actually trying to push to the long side here to see what kind of move I could get. And again, that could be totally thwarted by the Fed. I don't think it will, though, or potentially by Apple, which I'm a little bit nervous about. There is also a situation, I know Chris mentioned this to me earlier, where maybe Apple is weaker, but you actually get the rest of the stock market, the other 293 stocks of the S&P, to actually be able to hold up better off of Apple's weakness. We'll see if that happens or not. We definitely saw it last week. So that would be an argument to potentially pay attention to, maybe on Apple weakness if you're trying to find a silver lining there. But we'll take that as it comes. But for the moment, I'm doing, and I'm being honest about it, a little bit opposite to what I usually preach, which is, you can't get heavy to the long side unless you got, one of two things. Either you get the extreme extension, which we did have Thursday, Friday last week, and that's where I was starting to build in a little bit more heavily to the long side, or technical confirmation on the upside. And we definitely haven't had that yet. And we're not in the extreme territory on the downside now here either. So that's why I'm saying, as a beginning of the meeting, if you want to just look at the technicals, and that's really what you should be going off of, this is exactly not the spot to be getting heavy to the long side. I would say, again, a lot of that was still coming from Thursday, Friday on my end, but I decided this morning, to actually push it a little bit further. And I initiated a pretty big position in this KRE, which I am swinging, even though I'm only slightly in the money on it. It's a pretty big position. I initiated a pretty big position in this OSTK. I want to see if these types of names can squeeze higher with both the financials, XLF in particular. We spoke about this a bit in the morning meeting, and this OSTK. I really like the failed breakdowns. I really like how this thing had a massive support break 2 trading sessions ago through like $15, just to recapture that the very next day and then give a rest day here. The stock absolutely needs to prove itself, though. It's got an 11% short float. It can squeeze higher if it wants. I think some of the bull flow we saw for yesterday was for $20. So that's kind of actually what I'm looking for here. I've got a big position that I put on in this OSTK. I will certainly manage that position if I'm wrong, but I like the risk reward. If this thing can, I love the false breakdown, but now it needs to prove itself. The way it proves itself is by getting really above like 16.25 to 16.50. I think if that can happen, $20 is very much in the cards, and that's what I'm looking for on this OSTK position. The KRE position, I put some size on in this as well. It also needs to prove itself. I really like how the XLF gave the exact same pattern I just talked about with OSTK 2 trading sessions ago, though it is obviously very different. If you're talking about Bank of America versus OSTK, you had this false breakdown of major support 2 trading sessions ago on heavy volume that washed everyone out, and it was able to fully 100% negate that the next day and gave great follow through. I've got a pretty decent sized position in Bank of America. Bank of America did exactly what I wanted it to do today. Well, that's not true. It did not do exactly what I wanted to do today, because the opening price action in Bank of America was very difficult. It broke that opening low. But we were looking at Bank of America for an inside, and up today we're looking at JP Morgan. Hopefully more people focused on JP Morgan, because even though I'm in Bank of America, JP Morgan was the one that I was actually really calling out more to the team here. But JP Morgan was the one that traded better. It never broke the opening low. So you got the inside up in JP Morgan. It's almost fully negated the Jamie Dimon sell day, which would be great if the stock can do that. Bank of America, again, the intraday today was very difficult to be able to execute. The daily chart did exactly what I wanted to do. The KRE was trickier. I think that for the KRE trade to work, I need this TLT to get back above 85. And TLT was strong all day. It sold very heavily into the close, which did not really affect the stock market. So it seems like that just might have been some of these end-of-the-month flows. So we'll obviously continue to pay attention to this as we go into the Fed day. 83 really important, 85 really important. But I feel fairly confident that if we can get this TLT above 85, that this KRE, which actually held in great today considering that sell-off in TLT into the close, gets back above 40. If I can really start clearing 40 to 40.50 in KRE, I'm looking for a move to like $45 in this, and that's what I'm positioned for. So I love the risk reward of a lot of these trades that I'm in right now that I'm very heavy in. The probability of success is definitely debatable because there's a lot of things that still need to happen in order for the market to prove the technicals. But I'm very fine with the risk reward, and with the IWM at this point down 18.3% and basically straight down for the last $10 as we come into some more bullish seasonality here. I really like my thought process, obviously, or I wouldn't be in it, of getting one of these, for lack of a better term, bear market rallies, which we can make an argument for sure on whether or not that's the right term, just in the same way that I was sort of kind of making an argument that you could say that this big rally that we had here in May, June, July is actually in some ways just a very large bear market rally. I know it was more than 20%, so then we call it a new bull market, but it's not like we ever broke real new highs for that. So we'll see what happens. This is how traders make money. You got to take a stand sometimes, and that's what I'm doing here. With that said, I am going to say this out loud to remind myself. The biggest losses I've ever taken over the course of my trading career was when I was so convinced that my idea was right that I didn't game plan for myself when I was wrong. So I can't make that mistake. I have way too much exposure right now to the long side. So I absolutely need to make sure that if the market begins to prove that my idea here is wrong, and it certainly hasn't even begun to prove that it's right, but based on where I've executed and where I've gotten heavy, it hasn't proven that I'm wrong yet either, that I manage the risk, that I size down / stop myself out, where appropriate. But now I've got new large positions in KRE, OSTK, I've got a shop position on, I've got a bunch of size in these other names as well, and we'll see how it plays out. I'm seeing out of the corner. I know there's a bunch of questions coming in, but I see out of the corner of my eye Brendan asking me if I would hedge by selling an ETF. I'm not going to do that. And so, do I ever hedge by selling an ETF? Yes, I do, but I will really take it as a trade more than anything else. And the way that I do that now, I have very specific rules. I'll short if we get $10 extended to the upside from the ADMA, and I've got a long portfolio on. That's where I'll hedge myself. I won't do it here. What I have found over the course of my career, by just being nervous and shorting an ETF to hedge myself, is I end up more times than not just costing myself a ton of profit. So what I would rather do than just put a hedge on shorting spies or shorting Qs without having a stop loss that could just bleed against me, is just be comfortable with the amount of dollar long risk that I'm taking with these trades and own it if I'm wrong and stop myself out, or obviously have a game plan in place to get really paid if the ideas work out and I'm right. So that's kind of my positioning update here with this market, and we'll see how it does. All we have right now based on these technicals is the oversold bounce. 3 heavy days of selling in a row. SPY's got $10 worth of extended. This was a Friday. Monday gapped up. I saw the statistic this morning in some notes that I was reading that the NASDAQ has had 16 positive Mondays in a row, and that the S&P has had 14 out of 15 positive Mondays in a row. I did not realize that. That's insane. I can tell you what that is. It's geopolitics. It's the fear price action that we saw on this Friday of people not wanting to take positions over the weekend with everything that's going on geopolitically, and then please don't think that this means I'm making light of a tragedy. I'm not. But then when it turns out after that weekend that it's not as bad as expected from a market perspective, then we get these big gap ups and kind of rallies on Monday. So you had to take a little bit of a stand on Friday, which was difficult, but with that $10 plus of extension, this is what I keep talking about. It's very consistent that it's the spot to potentially look on the other side for at least a short-term bounce. And that short-term bounce might just be what we got back here on October 23rd of 2 days of buying. And in this situation, what we're seeing right now, it might be the exact same thing. This could be it. It could just be 2 days of buying or back to the ADMA. We are no longer extended at all. We've satisfied the oscillator. We're back to the ADMA on the daily. We create a pivot high here, and next thing I know, we're making new lows, new recent lows in over the course of this downtrend. That's really what the technical analysis would say more. I would still point to, and maybe I'm reaching and I'm talking my book, there is still a rising 200-day with the SPY, which that does still technically mean, based on the way that I measure trend, that I think that the big picture trend is higher. So that's something to keep in mind. Though obviously the small picture trend and the intermediate picture trend are down. Qs are the exact same thing. We're still above a rising 200-day in the Qs. The IWM, the RSP, it's telling us a different story. The IWM 200-day here is flat, and it looks like it's just about ready to roll over and potentially become declining, which then means that big picture rallies in the IWM actually would fail if it becomes declining. If it stays flat, and my thought process is right, I don't think it's impossible that we see upper 170s or even 180 in the IWM by the end of the year. But it's a much bigger call than I usually make. I like to kind of take it day by day, and it's definitely with a big if. So yeah, we'll see how that plays out. As far as individual trades go for today, I don't really have too much. Our game plan for this morning was to be a bit patient as far as the market goes with where the market was, but there were certain names that I was looking at. I really liked the banks for today. And that actually worked very well as long as you're able to hold stock. Bank of America, JP Morgan. Again, this BAC on the small time frame was difficult with how they broke that low, with that market weakness that came in at that point of the day. JP Morgan never broke lows. I also was really trying to focus on a few of these growth names. Palantir for the RDR. Also, so tough to hold through this in the beginning of the day. But if you just had your stop loss in at opening lows with this RDR, I know it was difficult, but it never broke that low and it actually worked okay. Didn't really ever get the follow through 15 that I would have liked, but again, it was okay. OSTK never really broke above 16 like I wanted, but I'm going to continue to keep this on my radar. Chewy versus 1850. This was also a very tough trade. I called out in the open that you could try to be long versus the low of the first 5-minute bar, and that also held, barely. If you kept your stop loss in at lows, it held, and you were able to make a buck there. You related to him, Brendan? Tell him to make some more insider buys. I could use that. Oh, nice. So that's really all I got. I'm happy to turn it over to you guys for questions. I got a haircut appointment, so I can't stay too long. I'm in a friend's wedding party this weekend. Looks like Pat's going to a wedding. I'm going to a different wedding, but mine's in New York City, so I'm not traveling for it. Scrolling up here in the VTF to try to find questions as they came in. First thing I'm seeing is from Tom M. Look at SMH on the weekly, double top. 20% is NVIDIA, 5% is AMD. Wake me at 125. Whew, it's a 125. It's my 15-minute. Yeah, this SMH chart here looks. It almost looks more like the. Never mind. I don't know what I'm saying. I was looking at something that I thought it looked like, and I don't remember what. Yeah, this SMH chart looks weaker than the Qs. It's bear flagging here. It's into the 200 day. NVIDIA is a large part of that, so obviously we have to see what happens on NVIDIA earnings. Where's AMD right now? AMD's still hanging around that 94, so not good, but not brutal for AMD. 125 is a pretty decent move, but that move makes sense if we really break lower here and start losing 136. I think that move makes sense, but I think that you're going to need NVIDIA to really break through support in order to do that. Speaking of NVIDIA, the short scalp through 400 I think was a great trade today, but it didn't hold that 400. It snapped right back above. So we'll keep an eye on these semis. In some ways, the semis are the area that I'm most concerned about. Actually, in all ways, I think the semis are what I'm most concerned about right now with in regards to how the Nasdaq holds in. I just think that there is a lot of hype kind of built into like NVIDIA in particular right now since that last earnings report that they're going to continue to really deliver on this AI front. And I think that AI is more of a big picture thing. But, we'll see what happens on their report, which I think is still a couple of weeks away. What else? Scrolling through here. Yeah, so I see a couple comments here. One from Dimitri on the Fed, and one from where was it? I lost it. From Gilbert. Why take this position or view into the FOMC? I think we're going to trade positively on the Fed, and again, those are not the type of comments I like to say, because I think that we're going to trade positively on the Fed. Who cares? Who cares? Who cares what I think? Show me the price action, right? But again, I'm putting my money where my mouth is on this one, and I want to see what we're able to do here. I think that the Fed is going to give a pause. There's a lot of worries about a hawkish pause, which is similar to what we saw last time, which helped hit the market down. But he already gave us the hawkish pause. How can he give us an even more hawkish pause than he's already done? And I almost think the opposite, actually. I don't think he's going to come off as hawkish this time around, because I think that the Fed's got to be getting nervous, believe it or not, that things are becoming outside of their control. When you've got the Fed, the Treasury's moving the way that they've moved down here recently, like this TLT moving down the way that it actually has, without the Fed taking any new action, with the Fed saying that they are paused, just the market really beginning to believe that higher for longer is actually here to stay. And I think the statistic that we've read is that we have gotten 75 basis points worth of Fed hiking from the bond market without the Fed doing anything. I would almost think that the Fed's getting a little bit nervous here. So I don't think that we're going to see the same degree of hawkish message from Powell. That's my thought process. I could very, very easily be wrong on that. Because the truth of the matter is, what do I know? I have no idea what he's going to say. I have no idea what the questions are actually going to happen in the press conference. In some ways, you can definitely say that the economy is slowing a little bit more than the numbers say. The flip side is that the numbers themselves are still really strong, but there's arguments to be made that I say it all the time. The people in the Fed, they're not dumb, and I think that even though they make mistakes, and they certainly made a mistake by staying easy for too long and not starting the hiking cycle early. But I go back to what I keep saying. Yes, certain groups of people are hurting very, very badly right now, and other groups of people are doing even better because the Fed is. They'd be happy if the Fed continues to raise. It's and you can look at it through companies or you can look at it through people. And the perfect example is if you look at Microsoft, which could also just represent a rich person for us, the older established person, versus if you look at your average small cap or mid cap company right now, which you could say, represents the younger people that are out there. If you look at Microsoft, they have a massive amount of debt locked in for the next 10, 20, or 30 years or whatever at 3%. And they've got $150 billion in cash that they're making 5.5% on. Microsoft is printing money because interest rates keep moving higher. If you're the CFO of Microsoft, you're like, let me get another hike, please. Let me get another hike. And that circles back to the older, established, wealthy people who own their homes outright or at least locked in at low interest rate mortgages, who have income or have savings, who all of a sudden, my dad is retired, he owns his home outright, and he has income for his retirement, and now he's getting 5.5% on a money market fund, and he's thrilled about it. Oh, this is great. I don't even need risk in the stock market right now. I'm getting 5.5% on money market funds. It's great for them. It's great for Microsoft. But who's it bad for? If you are a smaller cap company, and this is what I keep referencing here, and then we're starting to see it show up in a lot of the research notes too, who's, you were able to raise some debt when interest rates were lower, but that debt's going to roll off in 2024, 2025, 2026. And if you need to refinance that debt at 9% interest rates or whatever, some really high interest rate, that's going to lead to your company actually going bankrupt. It's going to stifle innovation from startup companies that want to come into play. And this represents the younger people that are out there right now. If I got lucky to be able to buy a really nice home in Idaho at a 3% interest rate, during the COVID period. If you're someone that's graduating college right now, or you were a little bit too young to start household formation during that COVID period, and you're ready to do it now, you're getting married. I'm going to a wedding this weekend, and you want to buy a home, it's brutal. It's absolutely brutal for people who need debt right now. They just basically can't do it. So the Fed's creating this massive have-not situation that is eventually going to become a problem. And if they're doing that to try to bring down inflation, it's not working. It's not working. Because the older, wealthier people and the Microsofts of the world, they're going to keep spending. And I'll tell you what, you want to talk about let's say if AI is really this super innovative thing, who's going to be the winner in AI? You can't be a startup company and come out and raise debt right now at these rates with no plan to profitability for the next 5 or 10 years, like we just saw a million companies doing to try to get involved in AI. But Microsoft has unlimited cash, and they're getting 5.5% on it, and they can funnel all of that money into internal innovation towards AI. It's just going to make these companies even more massive, which is the argument also on why they're able to trade at the multiples that they're trading at, versus why the IWM names, that you could look at a lot of these names and say, wow, these things are actually getting pretty cheap here and trading at relatively cheap multiples. And the whole reason why the S&P multiple is still somewhat high is because the market capitalization of your Apples and your Microsofts, where you can make the argument that that's justified because of what we just discussed, these things are trading so cheap, but they're potentially trading cheap for a reason. And if you keep the interest rates this high, or you keep raising them, then a lot of these companies, they're not going to be able to innovate, and they're eventually going to go bankrupt. But again, I don't think that the Fed is dumb. They got to realize this. Sure, raising interest rates like they've done, and the rhetoric at least of higher for longer, I think that they can keep doing that for a little bit. But when you start hitting the point here in like late 24 or 25, I don't think that they're going to be able to keep the rates this high. So, whatever. Obviously, that's projecting out really far, so we'll see how it plays out. But that all circles back to what the original question was that a couple of you guys are asking me about, taking this position into the FOMC. And maybe I'm totally wrong. And again, I've got my risk management in place. It's a key to success in this business. Take your trades, manage your risk, manage your reward. Make sure that if your trade fails, that you will lose less than you will make if the trade actually works out. But I'm at a point here where my thought process is telling me that no one's ready for this market to go higher right now. And when no one's ready for the market to move in a direction, you know what happens. A lot of times that market moves in that direction. And I still think that could happen even with the bears being right. I think you could get a face-ripping, for lack of a better term, bear market rally as the flows change and sentiment is as poor as it is for a month, 2 months into the end of the year, that then rolls back down, post mid-January or something like that. So, to be continued, but that's my thought process. And again, I appreciate the question. Scrolling through here, I think the next question was from Dave S. Hey Dio, I wanted to ask about an indicator that I don't personally use, but I hear you and Pat mention it on the radio. This ETF for the US dollar, the UUP. I don't really know if this is something to watch in the same way as UVXY, where you can get a signal on a smaller time frame. I think it's generally a little bit bigger picture, but I pay attention to it on the smaller time frame too. Or if you just kind of take note of it once a day. It's tough on the small time frame just because of the way the dollar moves intraday. It tends to not be too great. A lot of times it's kind of choppy in here. But I do pay attention to the small time frame moves for confirmation. I did not like when this EUP was getting above 30. What I would mention about that, and Pat has done a great job, I think, talking about how we might see the correlation between equities and the TLT change, which again, I've spoken about this in afternoon meetings in the past as well. It's not fixed, meaning what we've seen recently is TLT down, stocks down. In other environments, it's the opposite. It's the opposite, and that's just whether you're in a fear environment. It's just the narrative of the day. And I don't have a ton of time today, so I'm not going to go do a deep dive here on that. But the one thing that we do got to remember is that the dollar does have some similarities. It is possible to have a strong dollar and a strong stock market. But very generally, a stronger dollar means that it makes these assets like more expensive, so they trade at lower prices. So the dollar goes down, commodities tend to go down, which I know there's a lot of chatter right now about GLD strength, and it's also something that I'm eyeing. See, GLD had a pullback, but if you want really that continued GLD strength, you need this dollar to actually break down a little bit. So you're looking at this big. And again, let's assume that the correlation stays the same as it has, which the narratives sometimes can change and the correlation can change. But what we have really seen for a while recently is, dollar up, stock market down. Dollar down, stock market up. I mean, you can look at that perfectly in conjunction with this peak that happened in September, October, with the stock market making its bear market low in October 2022. It's been very similar here. And in some ways, the market's actually been pretty resilient into this initial up move. This bull flag here is scary to me, though, and it's something that we got to pay attention to if we really start getting above 30. So, yeah, you can pay attention to it to some degree in the same way. And it's even the same thing with the VIX. It is possible to get the market up and the vol up at the same time. To have the VIX trading higher and the market to trade higher at the same time. It usually can't last for long periods of time. Usually can't last for more than a few days. But don't ever think, just because UVXY is going up that the market has to go down. It's not necessarily that way. Though that you're reminding me that someone had a great call at one point today with the VIX early here when we were looking at the market weakness, that the VIX wasn't higher and that UVXY was weaker, and that there was a deviance there, and then this broke down and the market broke up. So yeah, I guess it's primarily the big time frame that I'm paying attention to with that, but a little bit on the intraday just as a confirming factor.
So I hope that helps, Dave. From Eddie Vick, do you think Morgan Stanley too beaten up too? So Morgan Stanley's been weaker than the other ones. So I don't like the weak name as a general rule, and I learned this lesson a long time ago as a trader. Years ago as a trader, you know, I would see two similar names, Uber and Lyft. Uber had a great move. I would buy Lyft, thinking it has to play catch up. And what I've really learned over the course of my career is that's not true. Laggards can be laggards for a reason. A lot of times the laggard stays the laggard. And as a general rule, you want to buy the leader. The leader is JP Morgan. Increased some weakness with the Jamie Dimon selling news a couple days ago, but I still think that this is the best of the big banks that's out there. I think that's where the leader is. And Bank of America has given really good relative strength in some of these recent days. Also, big picture, it's been more relatively weak, but I think it's been a little bit better recently. So I would say go with the leaders. All right, cool. Looks like I got through everything on the VTF. Mike saying I think the 20% is an arbitrary amount and it's nonsense. And what he's referring to is that a bear market's when you go down 20%, a bull market's when you go up 20%. And I 100% wholeheartedly agree. You know, we do still need to have some rules where these terms can be appropriately applied, but I think that you got to recognize that not necessarily every 20% up move is a new bull market or a new bear market or kind of what have you. And in other circumstances, you probably have bear markets that aren't actually down 20%. Remember 2015, I think the S&P on a close-to-close basis went down 19.5%. On an absolute high basis to an absolute basis, it was down just over 20%. They never labeled that as a bear market, but the average stock went down like 38%. I label that as a bear market. The average stock went down 38%, but because of market cap weightings, on a closed basis, the S&P went down 19.5%. So they never labeled that as a bear market when I actually consider that one to be a bear market. And yeah, trend is what pays, for sure. From Frank asked, what do I think about TLT? We already talked about it a little bit, but basically 85, 83 is the spot to pay attention to. Whichever way we break could be a problem. I did not like the selling into the close in this thing, but I actually did like how the market held up in conjunction with that selling into the close, and it could have just been end of the month rebalancing stuff that was happening. All right, gang, I got to get out of here. I got to get my hair cut, which is usually once a year, but apparently I'm doing it twice this year. So I got this wedding and got to look good for the pictures and all that fun stuff. So everybody have a fantastic night. I will see you all tomorrow. Oh, happy Halloween, by the way. Oh, that's also what I'm probably heading over to the Halloween parade that goes through the village after my haircut. I don't really have a costume. I'm gonna try to dress myself up as an outlaw if I can. So again, have a great night. See you all tomorrow.